Hey everyone, CrowdStrike had a massive problem this morning that caused outages, that caused businesses to stop taking sales, flights were disrupted, and there are many other issues that are being resolved as we speak. So what does this mean for CrowdStrike stock investors? The stock price is down more than double digits on the back of this news. Is this a buying opportunity? Is this a reason for investors to get out of CrowdStrike stock? Let's take a look at the details and I'll answer some of those most pressing questions about CrowdStrike stock. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So first, let's take a look at the details of what happened. So industries ranging from healthcare to banking, air travel, and others faced a global IT outage. Now this hit computers that were on Microsoft Windows and servers connected to the CrowdStrike security platform. So you needed to be on both Microsoft Windows and the CrowdStrike security platform. So it could take a while to fully resolve all of these blue screen issues, and the standard fix requiring a trip to safe mode, but Microsoft is now advising that rebooting systems up to 15 times could fix the issue. 15 times to reboot. Now, some of these systems are coming back online, I'm reading and seeing, but there are still some companies facing issues and they're having a hard time getting their systems back up and running. Now, CrowdStrike said that this is not a security incident or a cyber attack, according to a post on X by the CEO George Kurtz. Banks, airlines, TV broadcasters, supermarkets, and even Starbucks had systems crash due to the issue. So it's not a cybersecurity issue, it's an update problem. The CEO saying that they were updating some content and that update caused this big problem. So they're working to resolve this issue. Nevertheless, this is going to have a negative impact on CrowdStrike. The company is forecasting its next quarter revenue of about $960 million. And for the full year in their fiscal year 2025, which is their current fiscal year right now, they are forecasting revenue of $4 billion. Now, when they next update investors, I'm going to be hyper-focused on this revenue forecast. Are they maintaining this forecast or are they downgrading due to the issue? Because when a company has a big issue like this, it's a reason for many of its customers to cancel or move to another provider. It provides reason. Some customers may have already been on the fence looking to switch providers, and this is the issue that gets them to switch over to a different provider. What's more, CrowdStrike will need to work harder to retain customers. So even existing customers, CrowdStrike now needs to communicate with them and make sure they're still on board. They may have to offer additional incentives to keep them on board. I highlighted a company like Starbucks earlier that's impacted by this issue. Will Starbucks want to stay with CrowdStrike after what happened? Maybe, but certainly if Starbucks was interested in staying with CrowdStrike, they would want to communicate with them and say, look, this issue caused our business X millions of dollars because we weren't able to take orders and it made the customer experience worse. So what are you going to do about it? Are you, CrowdStrike, going to help alleviate some of those losses we experienced? Are you going to give us a discount on our service with you? Are you going to offer us 20% off, 25% off? Maybe give us a rebate of what we already paid you? I wouldn't be surprised if CrowdStrike has to have more of those discussions with more of its customers that experience this issue. And to keep those customers around, I wouldn't be surprised if CrowdStrike has to offer those kinds of promotions and incentives because understandably, their customers lost revenue. They lost business, their customers experienced outages, and what usually happens in these cases is a Starbucks customer that wasn't able to use the app is not going to blame CrowdStrike for the issue. They're likely going to blame Starbucks for that worsened customer experience. So Starbucks is going to take some of that reputational hit as well. Of course, CrowdStrike, it's in the news that the issue is caused by CrowdStrike and the outage caused by CrowdStrike. But customers on a daily basis, on an operational basis, when they go onto the Starbucks app, or if they go onto the Delta Airlines app and they're not able to see the things they're usually able to see and make the orders they're able to order, they're going to blame some of that issue on the company. Even if CrowdStrike was the cause, they're going to say, well, why are you signing with CrowdStrike? Why are you working with CrowdStrike if their systems are prone to this kind of problem? So I'm going to be very focused on how these forecasts change for CrowdStrike when they next update investors. Did they lose any revenue for the year? Did they lose any contracts? Did any of their customers cancel? And how much customers canceled as a result of this issue? Furthermore, did you have to offer additional incentives and promotions and rebates as a result of this issue? How much is the total cost of this issue to the company when you look at it holistically, both in terms of lost revenue, lost reputational factors, and the added incentives and promotions you're having to provide customers? Now, I have not had CrowdStrike stock rated as a buy. In 2024, I've reiterated that the stock was a little too expensive for my investment, and I last updated that recommendation on June 4th, telling investors that I thought the stock was too expensive to add to your portfolios at current valuations. Because of today's issue, CrowdStrike stock price is down 11.5% from the highs of the day. Still, CrowdStrike stock is expensive. It's trading at a forward price to earnings of 61.52, and this forward price to earnings ratio likely does not yet account for the fact that its earnings are going to be lower over the next year as a result of this issue, because there's going to be some revenue loss, there's going to be some added costs, and so its earnings per share are likely to be lower over the next 12 months than they were prior to today's disaster. But it's not yet accounted for in this forward price to earnings ratio because the Wall Street analysts that make these projections for their next 12-month earnings per share outlook haven't had time yet to absorb and digest this information, update their models, and then submit their models. So this is just too new to incorporate yet into the forward earnings per share expectations, but I suspect they will be revised lower. And so the valuation is going to be that much more expensive. So to answer the question, is this situation a buying opportunity to get into CrowdStrike stock? I would say no. I would say the stock is still too expensive as a result of this issue. It didn't become valuable enough. The price didn't drop enough to account for the lost earnings and the lost revenue as a result. So not a buying opportunity. And also I would say it's not a reason to panic and sell. I don't think that the issue is going to cause enough harm to the company where investors should panic and sell if they already own the stock. But if you don't already own it, I would say it's not a buying opportunity. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.